Then next is the quality. The quality of business, quality of management. You have to have high quality business. What do you mean by high quality business? It has to be a business where generally there is a lot of profit or a lot of profit potential is there. I would like to see a business where profits are already there, say banking, financial services, pharma, IT, consumer products. So when a new businessman comes in that particular field, it is much easier for you to figure out whether he's going to make money or not. But somebody starts making money in, say, airlines, where there is no money. Not only in India, there is no money in the world. And then somebody comes and, sir, I made 100 crores profit, would you like to buy? I'm not interested in buying that. Because I'm not saying that company may not prosper. It may prosper, but it will be headwinded in the sense that, I mean, I don't want to apply my mind because the tailwind is not on his side for the business in the long run. Today he's making money, after 2 years again it might go bankrupt. So it is better to stay in the businesses where there are large profit pools, which is there today in India in IT, pharma, banking, consumer, maybe in oil and gas now. Then it has to be one of the things is that value migration. I mean, one of the biggest value migration which is on right now. Value migration is the round the clock somewhere in the world, in some products, some company it is already on. But right now, $1 trillion value migration is on between the software, in the software industry from the developed world to developing country, more particularly like India. So from a $60, $70 per hour cost in Boston, all the work is coming here at $6 or $10, $15 per hour in Bangalore. And it's a huge trend, nobody can stop it. Even if the US government wants or anybody wants, they cannot stop it. So this migration is, just look at the size of the migration. In 2000, software services industry globally was about 500 billion. And we were 5 billion, so we were 1%. Today it is 960 billion, we are 100 billion, we are 10%. So we given 10% share in the global software services. And the world is going nuts, they are going digital. So in next 10 years, probably the services will go to 2 trillion in 15 years. What will be our share? This year our share is about 35-40%. Would it be 500 billion, 600 billion in next 10 years? So that's what is staring at us. And that's a huge opportunity. Which companies are going to make it? That is for the guys. So we have to keep looking at generic migration in banking from public sector to private sector. I mean, will the public sector become, something like Doordarshan types? But that is 70% of the market. So there's a huge tailwind for the private sector, NBFCs and banks. So, so you can keep going, say like strategic niche opportunities. Like in 15, 17 million motorcycle market, you have a Aisha which does just about 300,000, but makes money hand over fist. They're on seller's market, they're not on the buyer's market. So they can charge their price. Steel prices going down, petroleum product prices going down, they will raise the prices. So that kind of niche is required. Dominant share, Pidilite, United Spirits. I mean, this is the youngest country in the world, 50% market share with Brown Spirits and United Spirits. I mean, they're going to make money. The best business, best manager. How much money they can make, only time will tell. So economic mode, like Bosch. Bosch is almost 70%, 80% market share. I mean, no automotive in diesel will move without Bosch. So all the development, all the river linking, all the road making, all these guys, they have to buy diesel system and it has to be supplied by these guys. So there is massive money to be made. How much, I don't know. So I think you have to have your own themes, your own framework. There are many more frameworks which we have not put here, but you would be having, and you have to use them before you identify the idea. Quality of management, I think this is the most important one, more important than the business. Highest integrity, I mean, I think, first thing is the competence. I think competence has to be highest, which in India you find all over. The guys are very, very competent. Integrity, you never find in India. It's the most rare commodity in India. So you have to find competence and integrity. I think I always struggle with this, but I think I'm becoming better with the mistakes. I mean, more recently, the mistakes we have committed, that is making me better. I hope I'm becoming better. And then third is, which is most important for this kind of companies, is growth mindset, the passion, the 24/7 urge to take the company forward. The growth has to be kept going. And growth has to be kept going not by the external forces, by the internal management forces. And that is what is the differentiating between a company in the same field than other company. So you need the transition of the management so that you can keep importing new energy at the top end. The moment the top end energy goes away, you've seen in Infosys, the moment Narayan Murthy and Nandan's energy went away, they didn't replace with the good energy. Now they're replaced with, I think, new horsepower. So hopefully it takes it again forward. So you need the growth mindset and passionate 24/7 physical raw pulling power. And so what happens is at this juncture, it is said by Phil Fisher in one of the books that 90% is management, 9% is business, everything else is 1%. Keep that ratio in mind. So pick up the guys who are really big blasters. Now, what happens is the growth is not only about sales growth. There is a sales growth itself is two parts: sales volume growth, sales realization growth. So it is a multiplicative kind of thing. If you read the report, then you realize volume growth multiplied by price growth multiplied by margin growth means cost reduction, multiplied by valuation growth. So you have 4 or 5 levers. People are focused only onto the valuation situation. 40p is very expensive. Don't touch it. I mean, yes, it might be right in most of the situation, but you can, if somebody tells me it is 40p, but margin is going to go 3 times more or 2 times more, then for me, effectively, it is 17, 18p or 20p. I am very happy to do that because nobody is focused onto the margin growth. And it is all multiplicative. Volume multiplied by price growth, unit price growth, multiplied by margin growth, multiplied by P growth or valuation growth, whatever, price to book, price to earnings, whatever. So when you understand all 4, then only you get the total growth. So you have to get 25, 27, 30% every year out of all 4 multiplied. So you have to be insightful about one of them. That also is good enough.